I've got a question from Twitter, for you. It says that FRS typically issue clarification circulars that will impact on the audit approach. That can we expect similar circulars from RAMFAC? And does RAMFAC rely on clarifications that the FRS have provided?
Well, first of all, RAMFAC is not a tax authority agency, so it cannot issue, we are not aware it's issued any circular. We don't imagine it will be in a capacity to issue those circulars. And the second part of the question is actually very interesting, because FRS itself has also issued circulars to clarify the manner in which they interpret provisions of the law, and they would apply those provisions to taxpayers. So the question really is, when RAMFAC comes on field and simply reads the provisions of the law, the CITA, that's the Company Income Tax Act, and chooses to take a different interpretation, what then happens? Which is why there's a whole lot of confusion. We've seen audits in the past whereby taxpayers will say, FRS audited us, we gave these explanations, we clarified the nature of our business. This was accepted. But RAMFAC says, I don't believe you, or I don't accept it. I've chosen a different point of view. And that is where there's a lack of clarification, there's a lack of clarity, there's confusion, and where you have those lack of certainties in the tax space, it actually affects our abilities to have certainty in terms of.
So when you look at the achievement or the progress that RAMFAC has made, does it not justify, whether we can talk about the legality or not, does that not justify the ongoing verification that RAMFAC, has done?
Wally, and I think oftentimes it's facts and data like this that leads us to make decisions that gives us short-term gains, but in the long term is detrimental to the economy. And the figures that you shared, they are pretty much sensational. When you hear about 700 billion in 5 years, wanting to recover 1 trillion. And the question is, oh, you mean people are owing government this amount of money? By all means, we should go, that's the kind of sensation it creates. Let's go after it and recover what is really due to government. And just going on a very granular level, I ask myself, to what extent are these amounts truly owed? If we've had a chance to speak to any of the banks that have done RAMFAC audits, you would understand there are so many controversies that even at the end of those audits that remain. And one of the tools that RAMFAC has used to enforce collection is to use those agencies that you mentioned, EFCC, ICPC. And, it's actually under the threat of, imprisonment or harassment of their principal officers, the CEOs, the CFOs, that banks a number of people capitulate and, they just pay those liabilities, even though they are not fully in agreement with them. So I don't have the data, and I'm sure nobody has it. But in those numbers are potentially this multiple taxation we are talking about, whereby people have potentially paid taxes twice on the same income. Now, yes, there's probably a decent amount of these liabilities too, which is legit, which means maybe taxes that were not properly accounted for in the past and which RAMFAC is recovering. But the question is, there is an agency that has been set up to do this work. What government needs to strengthen FRS, and government needs to ensure that the agencies, the tax authorities, can do their work properly. Maybe this should be an indication that what really FRS should be doing better, so that we can direct attention at it. But if you then strengthen RAMFAC, which is not a tax authority, we create, like I said, uncertainty, confusion there's nothing as bad as uncertainty in your tax numbers. A lot of businesses close their returns 5 years after, 6 after. You can't even determine whether you're still going to have tax liabilities. It makes their investment decisions, their normal business operations, it makes those decisions very difficult to reach. So again, that's why I said in the short term, it may seem like this is good money that enables us to shore up, especially in a year of recession whereby we have huge deficits. But in the long term, what is the price that we pay for this? I think we should look at that. The other thing we should look at is what have other economies done in a recession like this to actually reinflate the economy and pull them out of recession. We are aware that many economies in Southeast Asia, Hong Kong, and what have you, Singapore, what they've also done is to, it may seem tough that, when you give tax incentives, you reduce your tax revenues. So why would you want to? But what they've done is giving further tax incentives to encourage businesses to come in and invest. Because they know when those investments comes in, then there's going to be employment on the back of those things. There's going to be other multiplier effects on the, on the economy, which will eventually reinflate the economy. It may not happen as quickly as in 12 months horizon, but then the effects we're looking at, they're going to last longer than 12 months. So we're actually looking at you setting a realistic timetable in the medium term, 24 months. What can we do to reflate the economy? And those benefits and the positivities will be more permanent in your system than things that come and then they go off. These tax numbers have actually created a whole lot of problems. I know in recent years, a lot of businesses either have moved their operations to more favorable climates like next door Ghana and what have you, or people have sat on the fences instead of investing. So we're actually, we're suffering from the impact of this holdback. But because there's no data to counter it, who knows whether if we have the data, the numbers we reeled out, the so-called 700 billion, we realize that in the last 5 years, we've probably lost times 5 of those numbers.